The coffee industry in Laos is one of the fastest growing in Asia. Its output is still small compared with regional leaders like Vietnam and Indonesia, but fueled by increasing demand from neighbouring China, production grew by more than 8% last year. Growers say Laos has a real opportunity to take the industry to the next level through improved infrastructure, like better processing facilities.
We must have financing.
But despite it being one of the few Lao export products, there's no sign the government is willing to help.
They think always to develop the country on mega projects, on hydropower, on mining, on big factory. But the small SMEs are not enough supported.
Indeed, the government has big plans to shake off the tag of one of Asia's poorest countries. It wants to graduate from the United Nations least developed country status in the next 12 years. And it's turned to China to help fund big projects like this economic zone just outside the capital Vientiane, which is being built in anticipation of the city expanding quickly. And a $6 billion high-speed train line that'll run from southern China to Vientiane. But the amount of money the Lao government is borrowing for the projects is causing concern. Public debt is estimated at around 68% of GDP, and almost half of the money is being borrowed from one source, China.
Too much reliance on Chinese financial sources certainly would be risky because this country will be exposed to this business cycle of China, credit cycle of China.
The Lao government says big investment is vital if it's to improve the livelihood of its people. One priority is healthcare, which, like many aspects of Lao society, has fallen into disrepair through poor governance and neglect. The main hospital in the capital was built by the French in 1903 and has had few improvements since. But as part of the government's healthcare reforms, work will soon begin on a new hospital to be built on the same site, built with Chinese money. Wayne Hay, Al Jazeera, Vientiane.